So basically, we are going to do October, November 23, paper 22. And this is question number 2. Come on, tell me two factors that cause the value of the non-current asset to depreciate.
Wear and tear
Hmm.
and economic factors.
And
Economic factors.
economic factors. Okay, fine. The second part of this question, we are asked to prepare delivery vehicle account,
Yeah.
delivery vehicle account, and the second thing that we are asked to prepare is the provision for depreciation for delivery vehicle. Are you with me?
Yes, miss.
Okay. Can you read the question, please?
Simon formed a parcel delivery business on 1st July 2021. On 1st July 2021, he purchased a delivery vehicle for $29,000 from his business bank account. He decided
Okay.
to yeah,
Can you tell me we are supposed to prepare the account for which year?
30th June 2023.
Okay. So year starts when?
1st August, no, 1st July 2022.
1st July 2022. So my
Hmm.
year is going to start on 1st July 22 to 30th June 23. So I
Hmm.
have to make an account from July 22 to June 23.
23.
Are you with me? Since I have to prepare from July 22 to June 23, does that mean that the vehicle that he has purchased on 1st of June, is that the balance begin down?
Yeah, that's the balance again now.
Yeah.
Yeah.
So on July 1, 2022, I have a balance begin down of my vehicle 29,000.
29,000.
Since I am making the delivery vehicle account and the provision for depreciation account both, it means that this account is maintained at cost.
Cost. Yeah.
Are you with me?
Yeah.
Okay, fine. This is done and incorporated as well. Can you read ahead?
He decided to depreciate delivery vehicle on a monthly basis using the straight line method. He estimated that delivery vehicle would have a useful working life of 4 years and would have a residual value of $5,000.
Okay, fine, no problem. Now he has estimated that his delivery vehicle that he has purchased, which is the delivery vehicle that he has purchased?
29,000.
It will have a residual value of
5,000.
estimated useful life of.
4 years.
So can you tell me the depreciation per year?
6,000.
Depreciation per year is 6,000. So if on the first date I have the balance begin down over here, so can I say on the first date on July 1, I will have a balance begin down of the delivery vehicle that I have purchased over here?
Sorry, miss, I didn't understand.
The cost is here.
Yeah.
So the depreciation will be here.
Yeah.
Okay, on the first date of this vehicle.
Hmm.
So the depreciation of this vehicle is 6,000
Hmm.
for the year in which you had purchased.
Yeah.
So this was in 21, 22. Your cost was 29,000. Your depreciation was 6,000. So your net book value is how much?
23,000.
Your net book value is 23,000. And now you have reached the year of which you are going to make the account. That is 22 and 23. Are you with me?
Yes.
Read it.
On 1st November 2022, a new delivery vehicle was purchased at cost of $44,000. The
Hmm.
old delivery vehicle was part exchanged at a value of $16,800. The balance was settled by a bank loan repayable over 2 years.
Okay, fine. So it means that you have purchased a new vehicle. On this side, the purchase should come in, and you have purchased the vehicle for 44,000.
Hmm.
Old was disposed. Old was disposed
Yeah.
at an exchange value of 16,800.
Hmm.
Old has gone, new has come in. So will I say when this old is going out, I will write it over here.
Yeah.
So this is happening in 2022, November 1. I'm writing disposal. This was disposed. So when the vehicle is coming in, I write at cost. When the vehicle is going out, I write at cost.
So 29,000.
29,000 is disposed. Okay.
Hmm.
What is the value of the vehicle that is disposed?
20,
The net book value, 23,000.
23,000.
And you have exchanged this for a value of 16,800.
800. Yeah.
That means the new vehicle that is coming in is going to have 16,800 because of the old vehicle.
Hmm.
Are you sure?
Yes. So
So
16,800.
16,800 is because of the disposal of your new vehicle, which was part exchange.
Yeah.
Yes?
Yeah.
And the balance is settled through a bank loan. So what is the balance?
So 23,000 minus 16,800.
44,000 minus 16,800. You had to
44,000.
pay for the new motor vehicle 44,000.
Oh, yeah. Okay.
Yeah, this
Yeah.
is given in lieu of part exchange.
Hmm.
Balance is 27,200.
Yeah.
He estimated that the new delivery vehicle would have a useful life of 5 years and residual value of 8,000. Can you tell
Hmm.
me the depreciation of the new motor vehicle? New motor vehicle is for how much?
44,000.
Useful life of
5 years.
residual value of
8,000.
so depreciation per year.
7,200.
Sorry,
7,200.
depreciation per year is 7,200. And now you're going to use it for how many years? How many months?
You bought it in November. So,
November, December, Jan,
so
Feb, March,
eight
April, May, June.
June.
So how many months? 1, 2, 3,
Eight.
4, 5, 6, 7, 8. Into
8
8
months.
by 12.
So you'll do 7,200 into 8 by 12, right?
Yes.
So 4,800.
Sorry,
4,800.
check properly. 44,000 is the 44,000 minus 8,000
Yeah, divided by 5.
divided by 5 is 7,200 per
Yeah.
year.
Now 7,200
Hmm.
into 8 upon 12.
Yeah. So on November 1, you are going to on November 1, you are going to depreciate your vehicle, your old vehicle. From which date to which date? From July to November. And on the
You'll,
last date, that is on the 30th of June 2023, You are going to depreciate your new vehicle from November to June. Yes?
But old vehicle we sold, right?
When did you sell it?
I sold it 1st November. So till that date ka depreciation also we're supposed to have.
Yes. So this was how much? 4,800?
Yeah.
Okay. Your old vehicle depreciation per year is 6,000 and you use it from July, August, September, October. 4 months. So 6,000 into
6,000.
4 divided by 12. So 2,000 is for your old vehicle
Yeah.
and 4,800 is for your new vehicle. This will go in your income statement. This is depreciation for the year.
Okay.
Well, don't forget to remove depreciation of this.
Yeah. So 2,000 is the old vehicle.
Yeah, because you've disposed it in November 1.
Hmm. So
And
both of these
4,000,
places you'll write income statement, right?
yeah. You can even club and write it on the last date, but I usually on the date of disposal, you charge depreciation of the asset disposed.
Okay.
Hmm?
Yeah.
So the account is done. Now we will close the account. The total of your debit is how much? 73,000. 2023.
Yeah. 73,000.
Now 2023, June 30th. You will have balance closed down. How much?
44,000.
And 2023, July 1. You will have balance begin down. With me
Yeah.
over here. Total is 12,800. Okay, here I forgot.
So disposal you'll have to put now.
You will have to put disposal. What was the old depreciation for this machine? Vehicle, I mean to say 6,000.
Hmm.
And the new depreciation up till the date of disposal is 2,000. So this becomes 8,000.
So you took 6,000 of our previous, like our old
Yeah,
vehicle ka full
accumulated
thing.
depreciation of the asset disposed.
Okay.
This is accumulated depreciation of asset disposed. And year 2023, June 30,
4,800.
don't forget to bring this balance.
Yeah.
Okay? So with this, we complete question number 2. Is there anything else?
No.
Calculate the profit or loss on the disposal of the motor vehicle. Yeah, here it is. Come on.
Hmm. So net book
You have
value is
to calculate the
23,000.
profit or loss on the disposal of the vehicle. So 23,000 is the net book value. Current year depreciation, how much?
8,000.
2,000.
Oh yeah, 2,000.
So net book value is 21,000.
Hmm.
You have disposed it for how much?
16,800.
You have disposed it for 16,800. So you
Hmm.
have a loss on disposal.
So loss of 4,200.
Of how much?
4,200.
4,200. Next one. Explain why it be more appropriate to depreciate motor vehicle using reducing balance method rather than straight line method. Come on, tell me.
Um, I don't know why you do that.
Motor vehicle is such a type of a non-current asset that loses more value in initial years.
Hmm.
It's more appropriate. What happens in reducing balance method? The asset is depreciated more in the earlier years and less in the later years.
Yeah.
So motor vehicle is that type of a non-current asset which loses more value in the early years,
Hmm.
and it requires less repair in earlier years.
Yeah.
And it requires less repairs and maintenance in earlier years.
Yeah.
So that is why we say that in the earlier years, you can charge more depreciation because your depreciation expense would be more and repairs and maintenance would be less
In the initial years.
in the initial years. So you are going to charge more amount to match the income with the expense. Okay. In the later years, what happens is your depreciation reduces, but your repairs and maintenance increases. So overall, there is an appropriate amount of depreciation that you are charging,
Hmm.
appropriate amount of expense you are charging.
Hmm.
Because here you are going to charge more depreciation, so repairs is less. So the
Hmm.
amount that will still go more. In the later
Yeah.
years, your depreciation is less, but repairs and maintenance will be more, so the amount will still go proportionately. But
Hmm.
when you're in the straight line method, your depreciation is stagnant, it is constant.
Yeah.
Repairs and maintenance will be less, so less expense will go away. Then again, depreciation is stagnant, but repairs and maintenance will be more.
Increasing. Yeah.
So more expense will go over here. So over here, what happens in the straight line method is that your charge on your income statement is not very appropriate.
Hmm.
And it is not even following the matching concept because in the earlier years, if you have less expense, it should be matched with the income and you should get appropriate profit. See over here, there will be proportionate charge on the income statement.
Hmm.
If there is proportionate charge on the income statement, so you match your expense for the year with the income for the year and you will get proportionate profit.
Yeah.
But when you're following straight line method, what happens that in the initial years you're charging less expense.
And in
In
the
the
future,
later
charging
years, there
more.
will be more expense, which is not appropriate.
Yeah.
Okay, so now you
Yeah.
tell me, what will you write?
So you say that the reducing balancing method is more appropriate because it charges a proper amount during the initial years and in the future years because the depreciation is high in the initial years and lower in the future. So that's more appropriate.
And for straight line method, you will write it would be unsuitable.
Hmm.
Why will it be unsuitable? As it
Because,
charges same depreciation over the life of the asset.
okay,
As it charges same
depreciation.
depreciation over the life of the asset. Okay.
Hmm.
So with this, we complete question number 2, October, November 23, paper 22.
Hmm.